Hey everyone, thank you for joining us. This is Garrett Goggin with Golden Portfolio. We're bringing you some of our favorite companies, and today we have Jack Stoch from Globex Mining. And thank you, Jack, for joining us today.
Well, thank you for your interest in Globex. I appreciate it.
That's no problem. I just want to give a brief introduction. I'm a value investor. I look for value opportunities, across the precious metal space. And, with the price of gold and silver rising, I see these value opportunities becoming larger and larger. I came across Globex a few months ago. I started looking at it. As you know, I like the royalties with the golden portfolio. And the Globex Minerals has been a prospect generator for years, and it takes a while for these to play out to start generating revenue. But I've looked at this company, and Globex trades at 36 mil market cap. It holds $22 million of cash and investments on hand. It's a enterprise value of only $14 million. And the best thing, they have revenue. The company brings in about $2 million revenue per year, which they use to pay their management expenses. So the company runs without any dilution. They run basically a break even. Jack's a very conservative investor. He pays the right price for the properties and for the royalties he acquires. He's very frugal, and the business reflects his strategy. So, Jack, let's talk about Globex for a while.
Okay, sure. One thing I'd point out that the revenue on average is around 3.5, not two.
I'm converting it to US.
That is US.
Okay, so three and a half.
Yeah, yeah, we're doing better. We continue to do better.
Okay, even better. And let me say one thing. There's some smaller royalties that I cover that have about 3 million and 3.5 mil or 4 mil of revenue a year. Royalties trade at a multiple. The smaller guys trade at about 10 times, free cash flow, or 15 times free cash flow. The big guys trade at 20 times free cash flow. Some of Globex peers are trading at market caps of about 150 mil to 250 mil. Globex is trading at $18 million. It's basically like a 90% discount to some of its peers. So, yeah, Jack, let's get into it.
Okay.
So how much year royalties are precious metals?
How much the number of them?
As a percentage?
The percentage, probably about 50%, 50 to 60%.
Yeah, okay. In your favorite ones right now, or which ones are bringing you revenue right now?
The one that brings us revenue right now is the Fayol royalty.
Mhm.
It's a small open pit that is being run by IM Gold, and we get quarterly payments from that. There looks like they're finished mining the open pit, and they're doing all the permitting to see if they can go underground on the property because it extends below the open pit. So that's been a source of revenue. But most of our revenue actually comes from option agreements. We have some revenue from royalties like the aggregate royalty, the Fayol royalty, but the bigger numbers come from options that we do where companies pay us to try to earn an interest in our asset base.
Right. How many option agreements you have going right now that are paying?
Right now, we've got about 9 that are paying.
What sort of properties are they?
Generally, they're gold, but we span the spectrum in the types of deposits and types of projects we have. We have about half the periodic table, plus specialty metals and industrial minerals. So we basically do anything to generate revenue as we go. Right now, for example, we have a gold option on a company called Emperor Metals, which have our Duquesne West project on the Porcupine Destor Break, which is one of the two main gold localizing structures in the Abitibi. And that deal is, I can't remember the numbers exactly, but it's 5-year deal, 10 million cash, 12 million shares, 12 million in work, and a 3% gross overriding royalty, if I remember the numbers correctly.
Okay. When you say gross overriding royalty, you're talking about a GMR?
Yeah, a GMR, which
Yeah.
is different than than an NPI or an NSR.
And you started that, didn't you?
Yes, we started that, and it's a very clean method of dividing the revenue or profit. What we do is uh, the GMR is the percentage, agreed upon percentage of the final product. So, for example, if we have a 3% GMR and there is 100 ounces of gold produced, we get 3 ounces of gold. It is nothing subtracted from the total. It's paid directly by the refinery into an account in our name. That way it is clean. There's no lawyers involved, no auditing involved. It's really, really a method that circumvents basically greed, because when money's on the table, people tend to get stupid.
Right, exactly. Yeah, it's more beneficial to you. You're getting revenue tied directly to the production instead of the net smelter return. Fayul, right? You said they're operating from an open pit. They're looking underground. What's the resource there?
The resource, actually, I don't have the final numbers of what they've taken out.
Yeah.
So I'd rather not give a number and maybe have to be corrected. But there's a good number of years potential uh,
Okay.
to go after underground. Uh,
Okay.
but I don't have the final number because they're a large company,
Yeah.
and they're actively working with taking out material and adding more.
Yeah.
Uh, the number I'd rather not be corrected later.
Yeah. Is it its own individual mine or it's contributing to one of their other larger mines?
The Fail project is an individual deposit, part of a larger property, but IM Gold have a mill called Westwood,
Yeah.
and they had some problems with rock bursts
Yeah.
underground, so they shut down in order to try to correct the problem.
Yeah.
So they needed outside feed, and Fayol is one of the projects, actually one of three projects that they decided to mine while they corrected the Westwood underground, and they
Yeah.
have corrected it. So that's going ahead too. So the mill is filling up.
Okay. And then Fayul, it's a what, 1% roll at GMR?
2%. That one is a 2% NSR. Uh,
Okay.
I bought that royalty, oh God, probably 10 or 12 years ago
Yeah.
in bankruptcy of another company.
Nice.
And nobody wanted the royalty. So I picked that royalty up for $2,500.
See that?
And another royalty also, just to the west of the Malartic mine, which is the largest open pit gold mine in the province of Quebec. And there are several zones and a former mine on that royalty property. So we picked up both of those for $5,000.
What's the other property called?
Amphi.
Amphi. That's one of the reasons why I started the golden portfolio is because they generate significant profits. You're extremely diversified, but royalties. The wealth creation is ridiculous. Paying $2,500. How much do you get from Fayol a year?
Fayol, this year we've got over $500,000.
Yeah, and that's been paying you for how many years?
Well, it just started about a year ago. Year and a
Uh,
bit. Year and a bit.
yeah. Okay. Okay. So you've already gotten $1 million back. You paid 2,500, $5,000 for it, right?
Yep.
Yeah. Do you expect that to increase as they go underground?
If they go underground, yes. The resource is higher grade underground,
Yeah.
and it's just a question of will they have the permit to ramp into the zone from the bottom of the open pit? I think they will. I think
Right.
it's definitely, with the current gold price, definitely going to be very economic. But
Yes.
at the end of the story, uh, we sort of sit on the side. We made our $2,500 investment,
Yeah.
and we sit there and let them spend the millions required to carry
Yeah. Yeah.
the project forward.
Right. And right now you own 252 properties at Globex, yeah, about 106 royalties, right?
Correct.
Yeah. And see, that's another reason why, I love the prospect generated royalty model, right? You're extremely well diversified. All you need are one or two or three to get lucky. And when I say get lucky, it's not a matter of like luck. It's a matter of, the harder I work, the luckier I get, right? Um,
Correct.
Whereas you get these miners, that have one mine or two mines, you get one mine going out of production, the equity's toast, the equity holders get wiped out. Where the royalties, they have hundreds of projects and hundreds of royalties, and all they need are one or two or three to go right, and they're generating tremendous amounts of shareholder value, like we've seen at Fayul. Any
Yeah.
other properties you'd like to highlight?
Well, we have a whole bunch of things that I think are pretty wonderful. The Duquesne West one, the deal with Emperor. I mean, that one's already got uncut. It's got 853,000 ounces. When looking at underground resources, the company Emperor now are working on the property. They just finished another drill program, and they are targeting, rather than underground mining, higher grade underground. They're looking for large tonnage, low grade. And they have the particular model, and they've been drilling all along strike. They've also gone back because Globex keeps old core from previous programs, and they're going back because they've got a different model theory, and they're re-assaying a whole bunch of old core that never was assayed before on either side of the higher grade material, trying to build out a large tonnage, low grade, lower cost model. So that's what they're working on right now. So that's just one of the projects. If you look at the 105, 106 royalties we have, most of those are companies that have paid us and done the exploration in order to earn their interest in those properties, with us retaining a royalty. So whether it's like the Mont Sorcier iron project or manganese projects in New Brunswick that is being worked on, and they're doing actually the metallurgical work right now. All of them are things where we've received revenue, which that revenue means that we don't have to go back to the market, raise money, and dilute our shareholders. We only have 56 million shares out. And the reason for that is that unlike other juniors, one of the focuses is not diluting our shareholders, generating revenue. And we are also, one of the things about us is that we're not in love with anything. I mean, that's actually, it's not true. I mean, I love gold, I love silver, I love copper, and so on. But our end game is money. Money is the final product. So it doesn't matter if it comes from gold, it comes from silver, or if it comes from manganese, talc, aggregate, whatever. So we acquire assets, we're bottom feeders, we acquire things when people don't want them. And then eventually markets turn. Resources are something, they see their sunshine day. Perfect example, antimony right now. Antimony, nobody wanted antimony. We picked up, I guess 4 or 5 years ago, we picked up a couple antimony projects in New Brunswick. Now China has stopped the export of antimony. Antimony is used in military uses, a lot, as well as a traditional use in fire extinguishers. So now
I was reading about that yesterday after I spoke to you briefly, and it's used for every military application. It's used for fire retardant. It's used for the bulletproof vest. It's used for, the weapons manufactured, like everything, right? And then some of the antimony companies have been exploding higher over the past few months, right, due to this embargo.
correct. So, in our business model, we picked up antimony. One of the property has a indicated resource or a historical resource. The other one has, very high grade antimony on surface. We picked them up when nobody wanted. We had no competition to acquire the assets because nobody cared. We worked on them. We upgraded it. We sat and waited. Price of antimony has gone through the roof. We've done a deal. I think it's about 2 weeks ago, we announced a deal on one of them. Cash, shares, work requirement, royalty. And then the other one, we're actually in discussions with somebody for them wanting to acquire that property. We'll see if we do a deal. They have to pay the price that makes sense. But that one's got antimony values up to 53%, super high grade on surface. And in addition, there's already about 100,000 ounces of gold outlined, because antimony actually is a pathfinder for gold deposits. So, it's an example of how we function. People can look at us and go, like, why the hell do they have that? Well, We have it because we have a long-term view. Okay. We understand that price fluctuate. We understand that technology changes. That's important to be positioned. Whereas most other junior companies, when the price of something goes up, they run around trying to find an asset, like the companies that are optioning antimony projects from us currently. So it's a completely different model, focused on making money, focused on not diluting our shareholders, but a complicated model.
You're a value investor.
Yes, absolutely.
Yeah, you're looking to buy stuff for the lowest price possible, which means it's out of favor, which means no one cares about it. You build a big portfolio, and then when the metal has its day, then you're sitting on an asset that's worth a lot of money that you paid nothing for it.
Correct.
Yeah,
Correct. And we do that all the time.
yeah. And then 56 million shares outstanding. You haven't increased your shares over the past few years. This allows you to sit back and be patient and wait, because what happens with the average, gold and silver, well, the mining companies is, they need cash. They're constantly diluting. So if you have an asset worth 100 mil, over time the share price is going to go down due to the constant dilution. Whereas you can just kick back and wait for the right time, right?
Correct.
And
Yeah.
what do you own? 13%?
13.2.
Yeah, okay. Okay.
Okay.
13.
One of the things you're talking about there, I should point out is we're talking about the value. Uh, if people look at our financials, one of the things that if they go a deep dive into them, they'll notice that we value all of our assets at zero. And one of the reasons we do that is because every year when your audit is done, you have to sit down with the auditors and evaluate each property based upon metal prices, market interest, all the different parameters. So the problem with that is it costs a hell of a lot of money to do that. So the only solution, not spending that money paying auditors, is to mark them as zero on our books and put the money in the ground and in acquisitions. If you look at most other junior companies, I'll give you some examples, just picking it out of the air. They'll spend $500,000 buying a property. They raise $5 million to do work. They find nothing on the property that is of value, so they go acquire another property. But yet that first property, which has no real intrinsic value, shows on their books at $5.5 million. The $5 million in work and the $500,000 of acquisition cost, even though there is no resource. Okay. So that's a bit of a difference. So you look at a bunch of small companies that are around there that are one or two property companies, and they show a lot of value on the books. We have 252 projects. We show no value on the books because we value that all at zero, other than things like real estate, because we have office buildings, we have land, and so on. So those have a value that we can't deny. But so it is a different way of looking, and it's important that people, if they look at the financials, understand that the total model of the company is completely different than other junior companies.
Because you're cheap.
You could say that. I prefer frugal.
It's good. You're not wasting money, right?
Exactly.
And yeah, I think it's might have hurt you in this day and age, but the smart people are getting turned on in the investment that, like, I'm able to go through the balance sheet and income statement. I see the value of projects, but so much of today's market is quantitative driven. They just go, they pull the numbers, they analyze them with AI. They say no assets. They're like, oh, this company's not worth anything. And, a fundamental guy like me and you look at each asset and you look at the value, and the value is just ridiculous compared to your enterprise value. One property that was interesting to me was Mount Sorcier, iron ore project in Chibougamau, right? And it's 67% pure high grade iron. And, this whole new Green Deal thing, they need building a lot of infrastructure. They need a lot of steel, irons used to manufacture steel. This Mount Sorcier is owned by Cerrado Metal. Cerrado only trades for 17 mil market cap. The Mount Sorcier project has got a $1.6 billion NAV. When in production, it's going to cost about 456 mil capex, but you own a 1% NSR, and then you spun off Chibougamau Mines with a 2% NSR. That 1%
right?
NSR is worth $6 million a year to you when the mine is in production. And then you
GM.
start looking at a royalty multiple of like 10x or 20x.
Yep.
Um, it's 120 mil. You're trading at 10 mil.
Yeah.
It's just the value's ridiculous.
Yeah. It's a GMR, not an NSR.
Yeah, okay, even better.
Yeah, yeah. No, it's a great project. We acquired it. I think we if I remember correctly, we acquired it originally by staking. So the costs was maybe a couple $1,000. And we did some work on it, upgraded the exploration potential, and then did a deal on the property where we kept a royalty, and then we spun out a company, Chibougamau Independent Mines. Every shareholder of Globex, for each share that they owned of Globex, they got one tax-free share of Chibougamau. And then Chibougamau has 2% gross, which is going to be somewhere, depending, it all depends on the numbers I'm using are fictitious numbers because it all depends on metal prices at the time. But somewhere between 12 and 14, maybe $15 million a year. Globex somewhere around $6 million a year. But the same shareholders have pieces of both,
Yeah,
right? So
yeah,
it's another way that we found of trying to create value.
yeah. And then Shibuya Mines trades for $5 million market cap.
Yep,
Yeah,
yep.
and they could be getting $12 million a year. That's 240 mil market cap at a large cap royalty multiple. It's ridiculous. That's why I wanted to speak to you, just to bring awareness. I don't think a lot of people are aware of, your portfolio and the opportunities
Yeah.
that presents. What
Now,
is,
sorry, just one other point, if I may interrupt. Chibougamau owns half of the Chibougamau mining camp. That's six or seven
mm,
former producers for copper
mm,
gold.
uh,
Globex has a 2% gross on each one of those projects, including a new discovery called C3, which has been drilled from surface down to 450 meters of high grade copper and gold. And then outside the main camp, there's a package of ground even bigger, which is high grade gold and silver with zinc. And there's an option with a company called Tama Gold. They're raising the money right now to drill that. And,
wow.
and we have cash payments, share positions, exploration dollars that'll be spent by Tama Gold. And if I remember correctly, a 3% gross overriding royalty on those projects. So
Nice.
even the spin out was much larger than most other junior companies.
Yeah. How many employees do you have?
About a dozen.
Who does all the geology?
We have six geologists, plus
Oh,
I'm a geologist also.
okay. Could you speak about the timing, like the current market environment? Like from what I've seen, you get prospect generators, they'll tread water for years, for decades, right? Without the right timing. And then their projects get advanced, the metal prices start moving, and then they come alive, right? And I've
Correct.
seen a few prospect generators like really come alive. Like the revenue growth over the next few years, ridiculous. And with the higher gold and silver price, right? They're all becoming very interesting.
Yeah, I mean, what's happening right now, it's not just gold and silver. Copper is going up, zinc is going up, antimony is going up, a whole bunch of specialty metals and minerals. Hydrogen. Who the hell was looking for hydrogen before, right? We actually have a hydrogen project, not by, any intelligence. It's just that we had a silica project and we ended up being right in the middle of a hydrogen play. And actually, we're expecting an offer on the project later this afternoon. So, it's the positioning that we do in Globex of being in advance of other things, of acquiring things when they're not in fashion, including gold. Believe it or not, gold was not in fashion, right? We were acquiring gold. We were staking gold. We were doing trades with other companies to acquire gold projects. I made an offer actually even the other day, well, yesterday, for a gold property. I offered cash for a gold property because it sits in the middle of another package where we have gold resources. It's a constant moving, living organism that has to feed, and we feed by acquisition, and then we feed others by them coming to us and acquiring assets and paying us cash shares doing the work. They take the dilution. They take the risk. We have properties that we have sold, or I shouldn't say sold, optioned 7 times. Each time we generate revenue. The property, if they don't do the entire deal, if it's a 4-year deal, for example, if we don't get all the cash, we don't get all the shares, if they don't do all the work requirement, we take the property back. Okay. And each time, like I'm thinking of one, I'm not going to say the name of it, but you know, they've every time that a group has taken it, they've done drilling, they've paid us, and weren't able to complete because of market conditions, metal prices, whatever. But the resource every single time goes up and up and up and up because it's a really good property. And then each time that we do a deal, the option price goes up and up and up, and it generates more revenue for us. It's a kind of like a living organism.
Yeah, and you know, you've been doing this for decades, or a decade or 2 decades, building this portfolios and just waiting for the right time. And now that you're the right time, you're perfectly positioned where you can't get caught up by starting a business now or you know over the past few years.
Mhm.
Yeah. What do you have any other GMRs coming on stream over the next few years?
Well, it all depends on our partner companies. We have a number of companies that are working on projects, trying to carry them forward. For example, the manganese project in New Brunswick. They've been working on that for a goodly number of years. They've done a number of drill programs. They've increased the resource, and they've been working with the university in the U.S. To fine tune a new metallurgical process to best deal with producing the best revenue stream. So that is they're working on that, moving that forward. But we have lots of things like that where other people are working to carry them forward. Will they reach home plate? I can't tell you. There's so many outside factors, metal prices, economy, politics, environmental standards. There's just so much. But there's a lot of things that are moving forward at currently, particularly in the gold space, because the metal prices, gold, silver, and so on, are going forward. So we'll see. We'll see. I don't want to predict, but I got every finger crossed. I got toes crossed. I got everything crossed.
Yeah. It's an interesting time. It seems like we're there. Any final last words about anything else you'd like to highlight?
The only thing I'd add is just in the monetary sense is that we have cash, we have shares in other companies, so we don't have to go to the market to raise money. I should point out that we own all of our assets and we have no debt.
Right.
And I think that's important when you look at other companies' financials, a lot of them have debt.
Yes.
I was offered a company, somebody's focused me on a company yesterday. I looked at it, good property, but financials are crap. They have debt. They've already got over 340 million shares out, and they're going to have to dilute more to work. Why would you touch it? You know? So
what are you going to do with your cash balance? Just I've noticed it increased over the past few quarters, right? Due to your cash flow.
well, we're normally we let other companies do all the bush work, all the high end cost work like drilling. This year, we're going to do at least 2 drill programs because we think that drilling those 2 projects will greatly increase the value of the assets if we do a deal.
Which two?
One is called Ruam Merger, and
Yeah.
the other one is called Ironwood, Wood Cadillac Ironwood, 2 former deposits, and the Ironwood is a new small, very small, 240,000 ton, 17 gram, half-ounce deposit that we discovered. And we've done some economic studies on it. It'll generate a big whack of cash. So we're doing infill drilling on that, somewhere between 12 and 14 holes. We have our drill permit now, where the bids are out to choose which drill company. And after that, then we're going to be looking at mining it ourselves, because we were approached by a company called Nova Mera, and they have what they call a surgical mining method. Very, very cost effective, and we think it'll work very well on our project. Cool thing about it, when they're mining using large diameter drill holes from 1 meter to 3.5 meters in diameter. They drill down the zone, the rock comes up, the ore comes up as crushed rock, you put it in the truck and you ship it directly to one of the local mills. So low capital cost, quick mining method, really, really kind of interesting. So at the moment, we're focusing on the potential of doing that. Although we were approached last week by a company interested in buying the project, but I don't think they can afford to pay us what we want. One of the things about us, which is going to sound sort of a bit odd, is that we have the ability to say no to money because we know what things are worth, and we're not going to accept a deal unless it was reflective of the value of the asset. A lot of other companies that in our space, they need money. They absolutely need money. So they will actually accept something that is below the par value of their asset. And we have revenue coming in. I mean, like just the Agnico Eagle deal. Next year, another $3 million. Plus on top of that, revenue from some various options that we have. So next year, God willing, Canadian over 5 million, maybe closer to 6 million, hopefully, in revenue. So, and that's without very much effort, because the 3 million and the option revenue, that's assuming we don't generate any other revenue from other deals.
Well, is that coming in from Ironwood, or where's it coming in from?
The deal with Agnico Eagle is a gold deal. We acquired and put together a package over a period of 4 or 5 years west of Rouyn-Noranda called the Francoeur and Arnfield gold mines. These are historical mines. We spent about $2 million upgrading the property with drilling, stripping, channel sampling, mapping, geophysics, modeling. And then we did a deal with Agnico Eagle for $15 million over 5 years. And a 2% gross metal royalty.
Okay.
So
very nice. And I'm just looking at Ironwood. Yeah, the grades are ridiculous. 17 grams a ton. It's right near LaRonde, right?
yes, not far from LaRonde, south
by
of
Agnico,
LaRonde, on the Cadillac Break, which is the other main gold localizing structure. And the other two mines on the property, the Wood and the Central Cadillac, are excellent. They require more drilling. And then just across the boundary on the west side, we have a 2% NSR, which we purchased on the Kawagama portion of their Radisson gold deposit. And they keep announcing drill holes with high grade intersections. So we're sitting back. Another example, we purchased the royalty because it was available. We sit back. They're spending millions of dollars advancing the O'Brien Radisson project, including the Kawagama. And we sit back and just create value, more value, more value. And they're looking to put the project into production.
Sounds good to me. I'm sold. But all right, I've taken up enough of your time today, Jack. Thank you for the highlights. It's a very interesting portfolio. It's a compelling value proposition, and we'll talk again soon. And thank you all for joining us. If you want to sign up for my free mining masterclass, go to goldenportfolio.com, learn more about Globex mining and the Golden Portfolio. And thanks for joining me today, Jack.
My pleasure. Thanks for taking the time.
All right, talk soon.